Welcome to Diamond's Edge Live. My name is Greg Diamond, editor of 10 Stock Trader at Stansberry Research. And this week I'm just going to cover how the uptrend is intact, but we're also overbought. What does that really mean? It means, at least from my perspective as a trader, this is not something that I would short, but it's also not in a position right now where, I would get aggressively long, okay? I'm going to cover looking at global stocks. Okay, I'll look across the pond. We'll look in Asia. All right, we'll come back to the U.S. We'll look at some things that are happening there in terms of what to expect. I'm going to talk about the next set of time factors that we just got through some late Friday on Monday that created at least a pause, some divergence in stocks. Okay, so I'll look at what to look for on the charts heading into June. Okay. And then I'll finish up with a correlation chart between stocks and interest rates and what I'm looking for in terms of what the Fed's going to do in their next meeting, how the bond market is going to start to react now that we're approaching 6 months with tariffs, digesting all this new information that's coming out of Washington D.C. All right, so let's get to it. Let me share my screen here. And what I want to start with is let's look at overseas markets, okay? And let's just look at the global Dow first, okay? And this is just the 50 blue chip stocks from around the world, all right? And what I want you to focus on here, okay? We saw these lows in April, okay? This was the high in February, and then look at where this is. I mean, just a huge rally, okay? Almost as if the trade war never happened, almost as if everything was, hey, this was just one big mistake on the investors' part, a lot of fear, and we're right back up to new all-time highs again. Okay, now you can see here, I've highlighted it. Might be a little bit hard to see, but 1, 2, 3, 4, 5. All right, and now you can see how the RSI is approaching 75. The composite index is overbought. So this is what I mean in terms of, look, the bulls are in control. We're at overbought conditions. But it's still just grinding higher. Okay, you can see within these dates over the last, or these trading days over the last few days or last week, let's call it, the range hasn't been very big, but the volatility hasn't been very high, and we just keep steadily grinding. All right, same thing if we look at the total world stock market, Vanguard total world stock market, that ticker there is VT, same type situation. Okay, the low in April rallied up. We're at new all-time highs, even just barely. All right, same thing. RSI is a little overbought. The composite index actually starting to slope over. Now, is this something that you would want to short? I don't think you do. All right. So for me, this is a situation where, and that's what I told subscribers, 10 Stock Trader subscribers over the last couple of days, at least when it comes to stocks, is I'm happy to be patient right now. Okay. A lot of people get in trouble because they overtrade. They trade too much. They try to force it. So for me, this is about just stepping back. Let me see what the market's going to give us, and then I'll cover, where we can start getting active again heading into June. All right. We can also look at, let's look at Canada. And I like looking at Canadian stocks simply as it's actually a leading indicator for a lot of stocks, believe it or not, relative with oil and some other things. But you can kind of see here, same thing as the global Dow, same thing as VT. Had a nice rally off of this, obviously the April lows. We're back up to new all-time highs. Similar type situation on the technical indicators. RSI is overbought. Same thing with the composite index. Okay, let's jump to Europe. Okay, and we can look at the German DAX, probably the engine of Europe, if you will. Same thing. You're seeing, a recurrence here in terms of the chart action, in terms of the price action. New all-time highs. RSI slightly overbought. Same thing with the composite index. Even look at a smaller country like Spain. This is the IBEX, Spanish IBEX index. Look at this. I mean, this just absolutely skyrocketed higher, well above new all-time highs. And once again, we have overbought levels on RSI and the composite index. We can even go over to Europe. All right, I don't like trading China, and there's various reasons for that. We had this big stimulus back here in September. It's gone relatively sideways, but even this trade war, and China was obviously a big part of that. Not at all-time highs, not even close really, but it hasn't been as chaotic or as much damage as some people might, have earlier predicted when this whole thing started in April. Okay, we can even look at Korea and similar type chart. Okay, off of the April lows, and we rally. Last one here is Taiwan, and again, it's a nice rally from these lows, but we're getting into these overbought territories. All right, so I think that just solidifies the point of the uptrend we're in. Bulls are in control. Volatility has slowed down. The price action has relatively slowed down. Okay, so again, for me, this is all about patience. Okay, now if we switch to the U.S., there's a couple things I want to look at. All right, here's the Nasdaq Composite Index, and this is starting to get a little narrow at the top. What do I mean by that? You can kind of see how this is starting to converge. The price action is converging. Okay, the RSI got into overbought levels. We're actually seeing the composite index kind of slope down a little bit. Now, is this something that we're all going to go out and short? It's not. It's just not, because again, we have this strong uptrend, and if you go all the way back, to what we were looking at earlier in the year, to me, this entire move from basically February, some stocks in December, all the way down to April, was a larger correction in the much larger uptrend from 2022. It's as simple as that. Okay, so what do I want to do? You can see here I have these next set of time factor dates that we're looking at. Earlier or last week, I mentioned to 10 Stock Trader subscribers, May 15th and May 19th was something to watch. Okay, now you never know if sometimes it's going to be clear if it's going to be something big or small. This is just, for now, looks to be a pause. Okay, stocks topped on around this time frame over the last few days, and hasn't really done much. Now, May 28th is when Nvidia reports. Obviously, going to be important for tech stocks, semiconductor stocks. Is that a catalyst to watch? Sure. Does that mean I'm not exactly sure what earnings are going to do. Okay, how markets react to that. That could give us the signal for whether to expect a high or a low that comes next. What do I mean by that? Well, if we look beyond Nvidia, okay, I have around June 10th, and these are plus or minus a day or two, okay, and then into the start of summer officially, or let's call it the last week of June, okay? So what does that mean going forward for stocks, okay? Now, let's say that we trade up into Nvidia, okay, and then we trade down into these June dates. If we trade down into those June dates, that's probably something where, I'll start to look to get aggressive. Buy triple leveraged ETFs, probably buy some call options as well. If we trade up into those dates, you can kind of see here, perhaps this gets us into new all-time highs. Then we pull back into the later summer months. That's fine. If we see that happen, okay, that's probably where I'll start to take some profit on some of the long ETFs we have in the stock market. That's how I'm looking at this, at least in the short term, at least is where it stands right now. Again, I'm going to be patient, not something that I want to short right now, okay? We can also see something similar, and this is XLF, the financials. Now look how I marked this, how financials topped here on the 19th. And you can see here I have this wave 3, 1, 2, 3. Maybe this is what happens here. We chop around, we get through NVIDIA. NVIDIA earnings aren't going to have that much of a catalyst for financials. Obviously, they'll still react, okay? But if we get this trade down into these June dates, this could be just that larger 4 off of this April low, early April low, and then boom, we're off to the races again. Something you can consider there. We can also look at, let's look at XLI, which is another way to look at the Dow. And this is interesting because it is at or near, did it make new all-time highs? Yes, it did. So you can see here, right into this week, okay, XLI made new all-time highs. Now look how the composite index is starting to slope down. Look how the RSI topped in overbought levels. That's starting to slope down. So again, look, and it might be a situation where we get a 3 to 5% pullback, and you say, well, you could have shorted it. You could. But for me, with what I'm seeing in terms of longer term cycles, but also what we're looking at right here, this is something where I would much rather be patient and wait for these lows to come in and then buy that, because I know on the rules of Elliott wave, if we get this wave 4 or wave 5 follows, I'll trade that rally. Okay. Same thing with another sector I like to look at, which is the momentum USA Factor Momentum Fund. It's a lot there. MTUM, but this made new all-time highs this week as well. Okay, same thing. Overbought levels on the RSI. Same thing with the composite index. You know, do we get? You can see how it's kind of narrowing at the top, just like XLF. You know, do we get this dribble down? Maybe it fills the gap here around the 220-ish level. Okay, 219, whatever it might be. All right, get into these June dates, and you know, and then we rally. And you know, this wave four, like typical wave fours, could take a little bit more time. But if you can accumulate those shares, okay, accumulate some call options, give yourself plenty of time for this. Let's say again, this is a drop into it. You know, that sets the stage for a rally into late summer. Another stock that I'm really paying attention to is Advanced Micro Devices, and this is a weekly chart. And you can kind of see here, it couldn't break above resistance. It couldn't break above its 200-week moving average. All right. Obviously, what's going to happen with NVIDIA on the 28th will be reflected in AMD. Whether that's good or bad, I'm not sure yet. Okay. But here's something else to keep in mind. All right. If we get, let's say we get this, we're looking at a short-term top. Okay. And we get this, you know, wave four-ish type price action. Maybe it's a little bit something bigger. That's fine. But if we get this new low into AMD, especially on this weekly time frame, and it happens into some of those June dates, okay, this could be a significant low for AMD. As 10 stock traders, longtime 10 stock traders know, this is one of my favorite stocks to trade. I just like the way that it trades. Okay, so this is something that I'll be looking for heading into the next few weeks. Okay, let's see what else we can look at. Oh, last one is correlation. Okay, and these charts are sometimes hard to read. Let me see if I can't get it a little larger for you so you can see it. But what I'm looking at here is the correlation between the S&P 500 and the 10-year interest rate. Okay, S&P 500 is here in white. Okay, and interest rates, 10-year interest rates are here in blue. Now, what's crazy about this to me is that as interest rates rise, stocks have been rising really since the Federal Reserve cut interest rates back in September. Very, very odd thing to see when the Federal Reserve cuts interest rates and interest rates rise. Okay, so now what we're looking at here is, okay, you know, during this, you know, I'll call it a meltdown in stocks in April, March and April. Okay, interest rates followed, and now they're starting to rise. The question I have, the question that I think a lot of investors have, what we're looking at in terms of what the Federal Reserve is going to do. We've seen inflation come down. CPI, PPI, some of the inflation expectations. I mean, it's all come down. Okay, oil's coming down for the most part. All right. So what we need to see, and then this becomes a fundamental factor, is all right. Are interest rates wrong? Are stocks wrong? Or are we at a new correlation where it's pricing in growth? Okay, where you know all this stuff starts to rally, stocks break out, continue to break out. Okay, not without bumps, without the road, and then interest rates keep rising. It's what's happening in DC affecting what's happening in the bond market in terms of the deficit that's going to be added, the out of control spending that still looks to be a factor, even though we have a new administration. Congress is addicted to it. All right, is that going to change? It doesn't look like it. So. Or are we looking at a correlation change now where interest rates start to come down and stocks start to rally? Okay, this is very, very important, at least from my perspective of how, you know, the market is going to move going forward, because how long can stocks withstand, you know, the 10-year above 5% or the 30-year above 5%? Mortgage rates, how long can, you know, are we going to get up to 10% mortgage rates? That's going to be a huge damper on the economy. So I don't have the answers to these yet, but it's something that I'm closely following and something that I've been tracking for a while. So this is something that I think going forward, investors need to take a look at. Okay, and it's certainly something that I'm going to be following. Okay, that's what I have for today. Again, you know, the biggest thing is right now is patience. We're overbought, but still in the uptrend. The bulls are still in charge. If we get this low into June, that's where I'm going to be looking to start buying stuff. Okay. If we get a high, I'll probably take some profits, then look to maybe trade some volatility. But that's what I'm looking at right now as it stands. So I'm happy to take any questions. Let's see here. How do you manage stop loss placement when markets stay stretched for longer than expected? Yeah, that's a great question. So risk management is the most important thing when it comes to trading and investing. It's the most important thing. One of my favorite sayings is if the most important thing in real estate is location, 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 the most important thing in trading and investing is risk management, risk management, risk management. So, how do you manage those stop loss placements? Well, a lot of it depends on, what's your return for the year? Are you up big? Can you afford to have a larger stop loss? Because even if you get that loss, you're still going to be up on the year. Are you down on the year and you have to manage very, very tight stop loss levels? So it really depends upon where your performance is. It also depends upon what your strategy is. Okay. But for me, I manage my stop losses based upon how much am I willing to risk. Okay. And then we also think about it, at least right now, and this is something that I've been talking about with 10 stock trader subscribers, is this relationship. I just mentioned it between stocks and bonds. I'm also incorporating gold in there. Okay. And we have all three right now. I'm trying to see which one, and we have pretty tight stop losses for the most part. I'm trying to see how this correlation shakes out. Okay. And then, if one gets stopped out, but two or three rally, great. If the opposite happens, then I know that correlation has changed, and then I'll run with that momentum. So it's a great question. Always manage your risk. It just depends on your certain situation, given your performance, given what you're trading, and then, where the market is right now. But, if we have this, as you said, stretch for longer, you would probably want to give yourself a little bit of leeway, a little more leeway than you normally would, just to allow for some volatility that you don't get stopped out. But here's the other thing I like to tell people too. Even if you do get stopped out, you can always jump back in. Can Elliott Wave help spot bull and bear traps? Yeah, it sure can. You can see here, this is just the NASDAQ again. This is what I would call a leading indicator, but you can see when you get these wave fives or wave fives up or down, and I'll give you an illustration of what that might be. Okay, and this goes back to the rules of Elliott Wave and what to look for. So let's say this plays out hypothetically. Okay, 1, 2. Let's say we get a 3 into Nvidia. Okay, and then we get a 4 down into June sometime. Okay, and then we get this rally. Let's say into the middle of August. Okay, now this is usually what happens. Okay, if we have this textbook Elliott Wave count. Okay, and we get this wave 5. What is wave 5? It signals greed. Greed and complacency. Okay, so this is something where a lot of people would say, I'm just going to keep buying, I'm going to keep buying, keep buying. That's the trap. That's usually when we see the pullback. Okay, so that's just the basic definition of how it can, or example rather, how you can see how these Elliott Wave counts will number one, trap people, but also give you a heads up that maybe you don't want to get as aggressive here. How many puts can you sink in a row? Oh, how many putts? I guess that depends on how far away the putt is, but I haven't played much golf over the last year or two just because of injuries, so it's not, I don't know what my record is, but golf is not my number one priority right now, nor has it ever been. Check out RIVN. Rivian, okay. This is something that I haven't looked at. Obviously, a lot of competition in the EV space, okay? So this is kind of some of those charts that we looked at last week. So, you can see here how it's just in a textbook downtrend. This was obviously a top here in November of 2021, and it's just been in a, quite a miserable downtrend ever since. Not without its short squeezes, but this is, you can see here, it's extremely overbought in RSI, not dissimilar from how it's traded in the past. Whenever you have these big spikes up, people take profit and then it trades back lower. What about interest rates, more TMF? Yeah, let's take a look at that. And this is something that I just covered with the correlation between stocks and bonds, okay, or stocks and interest rates, okay. And let me actually let me get rid of some of this stuff. Let's go a different chart. Let's go here. All right. So what I want to show you here, so this is a 10-year interest rate, all right? Now I had a tight stop on this. We traded TMF, which is, bullish bonds. Rates go down. I have a tight stop on it. Okay. If we get stopped down on it, this is kind of where the gold play and stocks come into play. It's like, all right, if we get stopped out, it's a short stop out on one, then the other two or three are likely to trade and then trade up. And so that's where we can take advantage of that. Again, I'm not exactly sure how this correlate is. The new correlation where it stocks up, rates up. I just don't know how long that can last without something significant happening. Okay, so let's take a look at this just from an Elliott wave perspective. All right, so from here, and this is from the high in January. To me, this is 1, 2, 3, 4, 5. Now here's where it gets very interesting. All right, is this an A, B, C? Okay, and so this is a big wave one down. This is a wave two up. It doesn't. So this is a 10-year interest rate. 10-year interest rate does not break above this 480 high. Okay, then we get a huge move lower. To me, that okay. So let's talk about the correlation. Under normal circumstances, that would be a good thing. Interest rates come down. Money is cheaper to borrow. Mortgage rates come down. It sparks housing. Okay. Things are obviously getting cheaper with inflation already. So this to me would be a boon for the stock market. But if the bond market goes down, or excuse me, if the bond market rallies and interest rates drop and stocks follow it, that means there's something worse going on. All right. So that's why, again, right now I'm just being patient to see how these correlations play out. But really keep an eye on this interest rate chart in the 10-year interest rate, because if this plays out, and this could play out relatively soon, I mentioned some of those time factors. Usually we see the interest rate market top or bottom before stocks. So let's see over the next few days, if not next couple of weeks, how this interest rate chart trades relative to the S&P 500 and other stocks. Any Fibonacci clues as to where to expect the wave 4 level drop in SPY? Awesome question. Yes, absolutely. Okay. So let's look at the S&P 500 and what we can do here. And you can see some of the other, let's look at other scenarios that we had that obviously did not take place and the bullish move took out. All right. So let's say we get this wave 4, and I'm just going to delete these real quick just so I don't like a whole lot of things on my screen. Easier to see. All right. Now this is where it becomes, how do you measure Elliott wave? And it's really about the Fibonacci confluence zones. So most people do something like this. Let's say this is the top. You go from top to bottom, okay, extreme high to extreme low, and then you measure it, okay? Nothing wrong with that, perfectly fine. But what I found is that what you want to do is measure multiple levels where the market had respected it multiple times. What do I mean by that? All right, so let's take it from the top, and let's see in here how there's these 3 bars again around the low in early April. Let's just take it from where all 3 were, where the market reacted towards those levels, okay? So 3 different bars, we'll take it from that low, and then you can see it's a little bit different. So basically what happens is, and we'll do one more, and I like to measure from what I believe is the low of the wave 2. And I'll take multiple measurements from that, okay? So now you have all this mess on here. You're like, okay, Greg, well, what do I do? This is what I like to do. And this is exactly what I do every day in 10 Stock Trader, at least when I'm looking for these types of levels. So you can go in here and I said, okay, here's a confluence of all these different levels, Fibonacci levels, from different locations within this high and low, okay? So what we can look at is I will do something like this. And then I delete all of these. And that gives me a much clearer example of where we could look for a low, okay? And you can see here as I'm talking, S&P is starting to drop a little bit, okay? Something just came out because NASDAQ dropped too. So this is where something where I would look for, okay? Now, we obviously have this into June, okay? Do we get a low? Is it choppy? So we'll get something like this. And for these levels, like 55.30 to 56.60, okay? Again, wave 4s can be a little bit tricky. So maybe we get something like this. All right, and then we rally or something like that, okay? So this is something where, I have to say, okay, is this the top of wave 3? That would be a situation where, okay, this would be the bottom of the wave 4, and we can start to take, some more risk. If a sharp pullback hits, what clues will help you decide whether it's a buying opportunity or a change? That's a great question. Let me go back to AMD because I think this is what is going to be very important as in terms of whether we're going to get a trend change or it's going to be a buying opportunity. If I see AMD test these lows while here, let's put them side by side. So if I see AMD test these lows, okay, and the S&P, gets down in here, maybe it drops a little bit. Maybe this is a complete wave one up and we have a wave two, okay? But if I see these lows into these June dates hold, makes a higher low in the S&P, and for whatever reason, AMD makes a lower low, that's a huge buying opportunity for me. Now, if I see something that's crazy drastic and everything, again, maybe this has to do with interest rates. I'm not sure, okay? And that's a trend change. I'll take that into consideration. This is why I'm being patient. Is your recent interest in gold strictly short term, or do you think it has legs? Let's take a look. All right. So one of the things that I always like to tell people is, markets can rally and they can fall much longer, much higher, much lower, much longer than you think. Okay. A great book to read if you want to just strictly look at long-term trends and stuff like that is The Way of the Turtle. That's about the turtle trading group, and there's a lot of books on it, but it's really, really good in terms of how they traded. And they're very boring traders. They would wait for a market to break out, and then they would just trade, even though it was overbought, even though it was at a very, very high level. That's when they would trade it. That's when they would buy it. Okay, so if we look at gold, it's been in a rally. The biggest thing for me, which is another correlation change, is that silver didn't really keep track, okay, at least going back, over 20 years, okay? The miners didn't, but now we're starting to see, everything start to pick up. So I have some, bullish, very, very bullish scenarios, conservative scenarios, short-term bearish, but you can see here gold's starting to rally. It's starting to break out. Now, whether this is something like this, A, B, C, D, E, okay, how is that correlation going to shake out with rates and bonds, okay? But let me just show you as an example of the bullish, does this have legs? Let me show you what I found, over the last, call it 48 hours that has piqued my interest, okay? Now, this is kind of hard to see, but basically what you're looking at is this from this high in, what was that, April 22nd, from the lows in early April. I've measured this, and this stopped right at the 61.8% Fibonacci retracement level. So if there is something drastic coming down the pike that maybe surprises investors, maybe, I would go back to the worst case scenario in the S&P. Maybe I'm wrong, okay? Maybe this is bad, okay? I'm still fine being patient. This is also why I bought gold. What does this mean? What exactly am I saying? This is what I'm saying. We could see, is this a wave one? This is a wave two, and then we have a wave three breakout. I mean, that's where you could push 4,500 on gold. I'm not saying it's going to happen. I'm saying theoretically, if this is the correct wave count, and this is obviously the most aggressive one, that's something that I have to take in consideration. Now, the most logical one is that this is a big wave four, and we rally up into these June dates. Let's say we have an opposite correlation with gold and the S&P. We rally and get a new high into June with gold. S&P makes a low into June. Okay, we see that higher low with the lower low in AMD. That sparks Stoxx rally, and then gold falls. So all things that I'm considering right now. Thoughts on investing in silver? Does it mirror with what's happening in gold? Yeah, I just mentioned it. It's just normally I like trading silver because it just moves so much in such greater fashion. It's huge. Now, look, it's rallied with gold, but it just hasn't broken out. If you go all the way back, and I won't show you that right now, but when gold and silver are rallying together back, after the great financial crisis and stuff, they both topped at new all-time highs in 2011. They both fell together. They both rallied together. Now gold's taking a leadership role. Now, with silver, could this start to break out? Absolutely. Absolutely. And, let's take these June time factors into consideration, okay? What is this measurement looking like here when I look at, a possible breakout? This didn't get quite down. It almost, dropped to the 50% level, sort of. So this could be construed as a 1-2, and then we have a huge breakout in silver and gold, okay? Something I'll consider. Now, if this breaks out in silver, okay, and now we see gold, take the lead, you can trade both, or you can just trade the leader. For me, the leader's been gold, so I'm sticking with that. Can you look at Zscaler? Yeah, I haven't. I traded Zscaler for a while, a few years ago. I haven't traded it recently, and basically because it, for much of 2024, it just kind of went sideways. You can see, back in 2023, I was looking at it. Okay, not dissimilar from what we've seen in some of the other earlier stocks that we've looked at. Okay, but overbought. You can see here, just looking at this right now, I'll highlight that the composite index is starting to diverge. So what do I mean by that? You can see how the composite index making a lower high, while the RSI made a higher high, but is also sloping over. We get this high. So to me, this is something similar to the S&P 500. Okay, if we trade down into those June time frames, that's probably a situation where you could look to buy, at least in the short term. Is high volatility better for trading when using this method? 100%. Absolutely. And that's why I'm being patient right now, is because volatility isn't as high. Okay, here's another situation to think about. All right, and this goes back to sort of your risk management. Okay, I mentioned it with gold last night when I gave an update to 10 Stock Trader subscribers around how we were going to trade it. Okay, so in and around here, I was trading calls. Okay, highly volatile. We still had the chance that we could have dropped into May. That didn't happen, but the risk to reward favored the upside, and I was going to trade from a low with high volatility. Now we're at a high, okay, and what I believe to be within a new uptrend. Okay, so do you want to get aggressive here? Not necessarily. Within the rules of Elliott Wave, I would rather wait until we get higher volatility and weakness to buy. And trade that volatility rather than try to get aggressive while we've already had this nice rally. And I'll also mention from the start of 2025, we've opened, well, today we had a new trade open. I've opened 25, we've closed 21. 18 of those have been winners. Okay, a lot of that based on volatility. So it's like, let's take a step back, let's be patient, let's wait for the next round of volatility to get aggressive, at least see what happens. Okay, at least with regarding stock market. Thoughts on SMCI? Sure, I was actually looking at that this morning. Super microcomputer, and this had a nice run last year, or 2 years ago rather, and then it's just been in a awful downtrend. And you can see here, okay. I don't like how, again, it's not keeping track with, some of the other chip stocks, not keeping track with the NASDAQ. And, it just seems to be in this new downtrend. So this isn't something that I would want to trade. And if, you held a gun to my head, I would be short and long other things, at least within that sector. Take a look at Dave. Sure. Wow, nice move of late. Actually, you go back here, it was dead here for a long time. Very volatile at the start, trying to break out, but I mean, look at this RSI at almost 90. Where did it get to a high of? Yeah, 92. So, if you're long, this is probably where, at least for me, I would take some profit, and then again, be patient, wait to see what happens, because now, if this can, hold this breakout and we get a drop, a correction, whatever it might be, and you might be looking at some positive RSI, positive CI reversals to be able to trade based off this recent move that Dave has had. Netflix. This is the last question, unless there are any more. Let's see here. Netflix has been just in a beautiful uptrend, a very expensive stock at almost $1,200 a share. But once again, let's look off the lows here, and I'll show you what we're looking at. And again, this is just me looking at it right now. But to me, this is 1, 2, 3, 4, 5. Okay, you can kind of see here this composite index at the bottom. This isn't, that's not keeping up. It's making a lower high relative to overbought levels on the RSI. So this is something, where it's like, again, do you want to short a stock like this? Probably not. I mean, look, it's just a beautiful uptrend, right? But, you know, is this something, again, where you want to get aggressive based on the rules of Elliott wave? Probably not either, okay? So I think this all just goes to show, you know, how to be patient, okay? That's it for questions. Thank you for tuning in. And next week we'll see, you know, we got NVIDIA earnings, okay? Then we start getting into June. If we see this correction happening, this is where we can get a little bit more aggressive. Thanks again for tuning in. I'll see you next week.